Morning, ladies and gents, and welcome to this LAT market snapshot. And we're going to bring oil into focus. There's a lot happening around the world at the moment. We've got Hurricane Idalia taking hold in the US, putting a huge amount of pressure on not so much the refineries of oil, but the supply and distribution of that oil, driving some potential upside here. And also in line with that, we've got a big draw in oil stocks numbers, which is also just putting increased pressure to the upside here for oil. So we're going to have a look at the charts. We'll have a look at potential setup here, which we could have bought into a dip that came through the European session this morning and a run back up through previous session highs. Okay, so let's dive into the charts here and have a look at the reason for this move in oil this morning. So we can see at the bottom here, we've got the EIA crude stocks, and it's a big decline and continuing to move lower. Over week on week here. It's really been back from the sort of start of March. We've seen a big decline in oil supplies. Oil rig counts also down, and huge pressure coming in off the back of Hurricane Idalia as we move into hurricane season in the US. And as previously just mentioned, it's not so much the oil refineries here that are having the issue. It's going to be a supply chain and distribution of oil issue here, which is going to prompt some potential further upside. So let's just bring the profiles in that presented themselves really over the course of the last couple of days. And it started really right down at these lows. We had strong excess at the lows, poor highs trading at the top, and a P-shaped formation here in oil on the volume profiles and market profiles. So lower prices down towards that $78 a barrel mark not being accepted, being bought in aggressively, and value being established slightly higher up towards the 78.50 to 79 range. That was last Wednesday. Coming into Thursday then, last Thursday, coming into the Friday, we saw again excess at the lows, so strong buying coming in, a P-shaped formation, value starting to shift higher. So again, positivity within this market, accepting higher prices, now shifting that range up to 79.30, up towards $80 a barrel, with the point of control being put in 79.85, so in around that $80 handle. And saw a bit of balance really coming into Monday, not a huge amount of commitment either way, a bit of a D shape and no real further information. And then yesterday we saw that pop higher. Now that was off the back of partly dollar weakness as well. We saw a more dovish tilt or expectation from the Fed, the jobs data coming out significantly weakening the dollar. A more dovish tilt on the dollar, giving some strength to risk assets. Gold also moving higher in a general broad-based dollar weakness move, and that spike higher again created more long signals for us. We generated this excess down at the bottom with people aggressively buying in at 79.50, which coincidentally just happened to be the previous high. From where the start of this buying really started to take hold. Now at the top, you could confuse this with excess at the highs here, but we've got sort of 3 TPO prints and then this ledge just beneath that. For me, happy to see that. What we'd like to see is this nice smooth curving from excess into the remainder of the profile here. This little step change and this ledge at the top, in effect treated the same as poor highs, suggesting we spent considerable time up here at 81.30 and an opportunity therefore for the market to continue to the top side. Now since then, coming into today, this orange dotted line is today's opening price, oil opening significantly higher than yesterday's value area, and therefore suggesting some positivity. And I'm going with that. This started to move and transition into a bit more of an uptrend. Now, levels to look to then get involved in. We had previous session highs and single prints on the low volume node in here, and that fell around 80, 86 sort of a region. We also then had the ledge here, yesterday's ledge, at the bottom of that sort of excess on that ledge for a retest of that to continue potentially moving higher. And which of those levels we were sort of most likely to come off was up for grabs really at the start of today. We bring in the 5-minute chart and we can see those two levels, those two blue lines. The red line in here yesterday's close and the blue line yesterday's high. So we started positively through a start of European session, having a move up into around 9 a.m. We saw some inflation data come out, a bit of volatility in the markets. Oil just slipped off those highs, dipped back down in towards that region we'd previously mentioned. If I just steal that line a bit slightly lower, you can see a nice support level also. Previous resistance once, twice, 3, 4 times, broke, became support, dipped into that level, and with the ongoing fundamentals um, Hurricane Idalia, this became a relatively simple purchase along down here. So buying in at 81.25, and oil since then turned back higher, got back above yesterday's close, back above yesterday's high, and has since gone on to take out the highs of the morning. And this still looking particularly positive for the time being. The question is where could we potentially run to? And just looking back through the charts, we've got some previous session highs up here at 82.50, just sat slightly higher actually, 82.56, but that handle of 82.50 potentially becoming a magnet. Poor highs to still be broken up there, significant ledge to be broken up here as well at 82.75, and another series of poor highs up here at 83.50. So this certainly has the potential to be a much bigger move. Whether we see that come through today after what's already been a nice move, um, we'll have to wait and see. But I think certainly a run in towards 82.50 will be a significant point. 82 handle round number. If we can get through that, that will be the next roadblock, I guess, for us as we have a run in. As we have a run up at these levels, but there's still a bit of room to play with here. We're trading at 81.74 at the moment, so another 25 points or so up towards 82s, and then 82.50s in the distance beyond that. But the fundamentals here, along with the market profiles and volume profiles, giving us clear opportunities and signals to want to buy into oil today. So really important to have a process, understand the technicals in play. I sat there myself watching the sell-off, really unsure as to why that was happening. The moment we saw that market slow down, create a really nice dragonfly doji down here at the bottom, it was the indication that no, this was likely to be a false move. We're going against the overall sort of biases within the market, the overall fundamentals in the market. We've turned back positive and made a run up towards the highs. Now, I know some of our students have caught that trade, speaking to them this morning. Well done to those that have. If you haven't, hopefully you can understand why this market was looking like it was setting up for longs this morning, and perhaps capitalize on a trade and opportunity like this in the future. Okay, that's all from me right now. Please do join us again from another market snapshot. Bye for now.